In this section, we're going to go over the provisions of the Tax Cut and Jobs Act.
What do you mean the Tax Cuts and Jobs Act? Karen, I was told this was about the Trump tax cuts.
That's it. It's supposed to be a boom for everybody.
Absolutely. So it's really called the Tax Cuts and Jobs Act. And when you look at it, Karen, there was two parts to it.
Yeah.
The big part in my mind was the corporate tax breaks.
Yes.
Okay, which we're really not going to go over in this class. But what we're going to go over is the individual taxpayer provisions of the TCJA. That's the Tax Cuts Jobs Act. Anytime we say that. So before we actually dive into this, Karen, I'd like to let our students know that some of the topics we're going to be very brief on, okay, and not give you much background. Other topics, we're actually going to take our time and give you some background so you'll understand how that tax cut or the change actually affected the tax code. So if you already feel like you know that topic, bear with us. We'll move on to the next topic. Otherwise, if you don't, the review might actually be good for you.
We'll start with the scope of the tax change.
In other words, how big was it? And it was really big, Karen.
That's huge.
Okay, so the first thing is it's tax reform, or at least that's what they said it was.
Yes.
Okay, and as far as the scope, Karen, what do you think?
It's the largest tax cut since Ronald Reagan in 1981.
That's huge. That was a big tax cut, and I don't think this one is not quite as big. And I think Ronald Reagan's was actually bigger because I think the tax rates were actually higher back then. So, Karen, what are we actually going to be looking at?
We're going to look at the individual tax reform highlights, the tax rate cuts and simplification of the tax code,
Okay.
and pass-through entity deduction.
All right, so there's a lot of new terms in that. We're not going to dive into that right now. We're going to get to it as we come through the course. But that's kind of the overview of it. And we're also going to give you an overview of the corporate tax reform highlights. And basically what happened on the corporate side is corporate rates got slashed from a top rate of 35% all the way down to 21%. That's huge.
That is huge.
Okay, and then there's a one-time repatriation of overseas funds at 15.5% on liquid assets, in other words cash, and 8% on illiquid assets. And you say, well, what's repatriation? Since we're not really going to go over this, let me take a minute. Basically, let's use Apple, the company Apple. You know, they got iPhones, right? They've sold them overseas. They've sold a bunch of them overseas. Well, they got a bunch of money stuck overseas, and the reason they don't want to bring it back is they didn't want to pay that high 35% tax rate. Okay, well, this money's been stuck, so now the government's given them a one-time option to repatriate that funds, bring that fund money back at 15.5%. So that was huge for companies like that. But we're not going to go on the corporate side on this. We're going to primarily stick to the individual tax reform and the highlights here.
So our learning objectives in this course is going to be our general topics.
Okay, let's look at what those are going to be. What's the first one, Karen?
We've got new individual tax rate and capital gains tax rate.
And then the next thing we're going to look at is an increase in the standard deduction amounts and the change in filing requirements for each filing status.
And there's a temporary reduction of the personal exemption, that's to 0.
That's right. We'll go over that more in depth a little bit later.